Welcome back to Investing Talk podcast. Today we're doing what we do best here, taking your sources, the articles, research your own notes, and really pulling out the key insights. Think of it as like your shortcut to getting up to speed, right? With some surprising facts, maybe a little humor too. Each deep dive is custom made for you. So our mission for this deep dive is tackling a question I know many of you are asking, especially with the market doing what it's doing, is CleanSpark. Is now a good time to buy. It's a company that's been on, well, a really fascinating journey. Lots of volatility with the stock. We're going to unpack its financials, where it sits in that competitive Bitcoin mining world, and what the experts are actually saying. Before we get into all that, if you find this valuable, please do hit subscribe, maybe give us a like, leave a comment, and if you're feeling generous, consider buying us a coffee. It genuinely helps us keep doing these deep dives for you. Okay, so let's unpack this. CleanSpark. Who are they really? Fundamentally, they're a pure-play Bitcoin mining company. Their whole focus is just mining Bitcoin. As of, let's see, June 20th, 2025, the stock was trading around $9. Now, you got to put that in perspective. That's a big drop from its 52-week high of over $20.
Quite a slide.
That kind of move, it always presents, potential opportunity, but also clear risk. Their whole model is built around finding low-cost energy and running really efficient mining operations across several states.
And what's really interesting there, I think, is their focus, their commitment to operational efficiency. They've somehow managed to position themselves as one of the most efficient miners out there, which in this business is a critical advantage.
Yeah.
Absolutely critical.
Right. And looking at the financials, the revenue growth is, well, it's been exceptional. For Q2 fiscal 2025, revenue hit $181.7 million. That's up 62.5% year over year. Huge jump.
Pretty impressive numbers.
And for the 6 months ending March 31st, 2025, Bitcoin mining revenue was $344 million. That's an 85% increase compared to the same time in 2024. But then, here's the twist. They reported a net loss in Q2 2025, a loss of $138.8 million. So revenue soaring, but a big net loss. How do we square that? It seems contradictory.
It does seem that way on the surface. But it's really important to understand why there was a net loss. It wasn't primarily because their mining wasn't profitable day to day. It was mostly due to Bitcoin price mark-to-market adjustments.
Ah, the accounting rules for digital assets.
Exactly. When the value of the Bitcoin they hold goes down on paper, they have to report that as a loss, even if they haven't sold anything. It really does raise questions about how we should interpret these financial statements for companies holding volatile assets like Bitcoin. Operationally, though, their efficiency is genuinely noteworthy. Their marginal cost to mine one Bitcoin is around $34,000. That's comfortably below current Bitcoin prices.
So they're still making money on each coin mined, operationally speaking.
Correct. And their fleet efficiency, how much power their machines use, has improved dramatically, down to 17.0 watts per terahash from 24.6 the year before. Basically, they're getting more Bitcoin for less energy, which is key for profitability and resilience, especially if energy costs rise.
Okay, that makes sense. And what about their balance sheet? How does that look? They seem to be in a relatively strong position there. Total debt is around $647 million, but the debt-to-equity ratio is quite reasonable at 34.2%. That suggests they aren't overly leveraged, right?
That's a good sign, yes. It gives them financial flexibility, less risk than if they were loaded with debt.
They also have about $97 million in cash. And importantly, nearly $1 billion, $979.6 million worth of Bitcoin held on their books as of the last report.
Oh, substantial holding.
Total assets hit $2.7 billion, and working capital was strong at $838.2 million.
And connecting to that strong balance sheet, their financing strategy has been quite clever. Remember, they issued that $650 million convertible bond back in December 2024.
Right, the one with the 0% coupon.
Exactly. That was non-dilutive financing. They raised money for growth without issuing more stock and watering down existing shareholders. That was a big win for investors at the time.
Okay, so financially, despite the headline loss, the underlying operations and balance sheet look pretty solid. How do they stack up in the industry? CleanSpark is, interestingly, the only pure-play, vertically integrated Bitcoin miner left among the public companies.
That vertical integration is key.
As of March 31st, 2025, they hit 42.4 exahash per second. That's over 5% of the entire global Bitcoin network's hash rate. So they're definitely a significant player alongside names people know, like Marathon Digital or Riot Platforms.
And their competitive advantages are quite clear when you look closer. They have fully self-operated infrastructure, which is getting close to that 50 exahash per second mark. That control means less reliance on others, better efficiency, more resilience.
They're not just renting space or machines.
Precisely. Plus, they've locked in a huge amount of power, 987 megawatts contracted. That secures their energy, which is a major cost. And they've built up a Bitcoin treasury of over 12,500 Bitcoin, purely from their own mining.
So they're not just mining and selling immediately.
No, they're holding a significant amount. It's like a strategic bet on Bitcoin itself, signaling confidence for the long term.
Okay, strong operations, significant player. So the big question for investors, valuation. How do we value a company like this? Because traditional metrics get tricky, right? That negative PE ratio of Anna's of 116, reflecting the Bitcoin mark-to-market losses, it doesn't tell the whole story.
It really doesn't. A negative PE for a company like this is almost meaningless because of that asset volatility.
Yeah.
So we need to look elsewhere. Compared to the broader market, say the S&P 500, CleanSpark looks expensive on price to sales 4.5x versus the S&P's 2.8x.
Okay, so pricey on sales.
But their price to book ratio is 1.34x. That's actually quite reasonable, suggesting the stock price isn't wildly inflated compared to their tangible assets. Their enterprise value to sales ratio, which includes debt, is 5.72x. That does suggest a premium valuation.
What does that premium imply?
It suggests the market is pricing in future growth and maybe their operational efficiency, despite the current headwinds. You really have to value these miners differently. Focus on hash rate growth potential, mining efficiency, costs, and the value of the Bitcoin they hold. Traditional metrics only give you part of the picture.
All right, so fundamentals look decent. Valuation is complex, requires a different lens. What about the technicals, the charts? Because the stock has taken a beating, down about 52% year over year.
And the technical indicators reflect that pain. It's a pretty challenging picture right now. All the major moving averages, 5-day, 10-day, 20, 50, 100, 200-day, they're all flashing sell signals.
All of them. Wow.
Yes, it points to a strong, sustained downtrend, not just a blip. The MACD indicator, which shows momentum, is negative, $0.1, confirming that bearishness. The stock's currently hovering just above key support levels around $8.78, $8.85, $8.93. With the price at $9, it's right in that critical zone.
Fighting to hold support.
Exactly. And resistance isn't far above $9.09, $9.15, $9.24. So there isn't much room for easy gains in the immediate short term, based purely on the charts. The overall technical rating is a strong sell.
Okay, this is where it gets really interesting for me. Technical screaming sell, charts look rough, yet the analysts seem to love it. CleanSpark has a consensus strong buy rating from 8 analysts.
That is a stark contrast.
And the average analyst price target, $21.33. That implies, what, 137% upside from the current $9 price? That's a huge gap. We've even seen recent upgrades. JP Morgan went from hold to buy in June, target $14. H.C. Wainwright kept their strong buy, target $27. Needham started coverage with a strong buy, target $20. How do we reconcile such a strong analyst view with such weak technicals?
That's the core puzzle, isn't it? I think that strong analyst confidence really highlights a belief in the company's fundamental strategy and operational strength. They're likely looking past the current market choppiness of the Bitcoin price volatility.
Focusing on the long game.
I think so. And recent operational updates support that view. They hit 45.6 exahash per second end of May, up 7.5% in just 1 month. They grew their Bitcoin stash to over 12,500 coins. And importantly, they secured another 72 megawatts of power capacity. That fuels future growth.
So they're executing on their plans.
Yes, they seem very much on track to hit that 50 exahash target, probably this month, June 2025. So while the stock price has struggled, the company's operational engine is running well, and that's likely what those analysts are focusing on.
Makes you wonder if the market's missing something or if the analysts are being overly optimistic about a quick turnaround. Classic investment dilemma.
Okay, let's look ahead. What could potentially change the narrative? What are the catalysts? Short term, say the next 3 to 6 months. Hitting that 50 exahash milestone is big.
Definitely proof point.
Their Q3 earnings report, expected in August, will be closely watched. Any significant Bitcoin price recovery would obviously help miners.
And deploying more miners using that newly contracted power.
And longer term, say 6 to 18 months out. Well, the big one on the horizon, though further out, is the next Bitcoin halving, probably March 2028. That always reshapes the industry.
Forces efficiency, consolidates the market.
Right. Their expansion into new states like Wyoming and Tennessee is another factor, diversifying their footprint. You could also see more M&A activity as the industry consolidates. And maybe, just maybe, strategic Bitcoin moves by governments or large institutions. That could be a wild card.
Okay, potential upsides. But we absolutely have to talk risks. Every investment has them. Stock-specific risks for CleanSpark. Bitcoin price sensitivity is number one, clearly. Revenue swings with the price.
You can escape that.
Mining difficulty too, right? As more miners come online, it gets harder, less profitable per unit of work.
Yes, the network difficulty is always climbing over time.
Operational risks, equipment breaking down, power outages, facility problems, and the ever-present regulatory uncertainty. New rules, taxes.
Always a shadow hanging over the crypto space.
Yeah.
And for the sector as a whole.
Yeah. That post-halving impact is still playing out. The April 2024 halving cut rewards in half. That directly squeezed profitability across the board.
It forces the less efficient players out.
Competition is fierce from established players and new ones. Energy costs are a constant concern. And technology moves fast, you need constant hardware upgrades, or you fall behind.
That obsolescence is a real capital expenditure pressure.
And then there are the macro factors nobody controls. Fed interest rate decisions impact appetite for risk assets like this. Broader crypto regulations globally, energy policy, especially anything targeting high energy use.
Environmental concerns aren't going away.
And that high beta, 4.37, it means the stock really moves with the market, often much more dramatically, up or down. High volatility is baked in.
Definitely not for the faint of heart.
Okay, so pulling this all together, strong operations, industry leader in efficiency, but facing Bitcoin volatility, post-halving pressures, and really rough technicals right now. Our overall investment rating, synthesizing all this, lands at a 6 out of 10 for CleanSpark.
A cautious score.
Right. The rationale is the fundamentals are strong, the operational story is compelling, they're well positioned as a pure play miner. However, the stock is facing serious headwinds. Bitcoin swings, the halving aftermath, those weak technicals. So while the long-term picture for an efficient miner could be bright, the near-term risks and those valuation questions temper the enthusiasm. It's a balanced view.
And this really brings it back to you, the listener. What kind of investor are you? This seems better suited for someone with a longer time horizon, willing to hold for 12 months or more, someone who can stomach serious volatility.
Not a short-term trade right now, perhaps?
Short-term traders face pretty significant risks, given the Bitcoin price swings and that weak technical setup. If you're considering an entry, sources suggest a more conservative level might be $7 to 50.70 cents and near those major support areas.
Buying closer to support.
Or a more aggressive entry, if you have strong conviction, could be around current levels, $8.50 to $9.50. Given the volatility, dollar cost averaging could make sense for long-term investors, smoothing out the entry price over time.
And for those who are more risk-tolerant traders looking at this, some guidance might include a stop loss around $7.50 below that key support to manage downside risk, take profit targets, maybe looking towards $12 to $14, which lines up with some of the lower-end analyst targets.
Sensible targets given the current climate.
And definitely keep position sizes manageable because of that high volatility, that 4.37 beta. Don't bet the farm.
Prudent advice. Key things to watch going forward.
Definitely Bitcoin price momentum. Their monthly production reports, are they hitting those hash rate growth numbers?
Especially that 50 exahash target.
Absolutely. How are they managing energy costs? Are the facility expansions progressing? And of course, any major regulatory news on crypto mining. And just the necessary reminder, this analysis is purely for informational purposes. It shouldn't be taken as personalized investment advice.
Investing in anything related to cryptocurrency carries significant risks and volatility. Please do your own research.
So thinking about a pure play Bitcoin miner like CleanSpark, maybe the real question isn't just, is it a good time to buy now? Nor is it great. But perhaps, are you building a portfolio for the market we have today, or are you positioning for the next chapter of digital assets? What really stands out to you after digging into all this? Something to think about. Thank you for joining us for this deep dive. We look forward to exploring more fascinating topics with you soon.